When a nation begins losing its vital economic assets, the consequences inevitably cascade into a comprehensive disaster, leaving citizens to grapple with endemic poverty and reduced public services. This alarming scenario is currently unfolding in the Gambia, where critical revenue-generating assets are experiencing an unprecedented decline. The government's approach to managing these assets threatens to create long-lasting damage to the nation's economic fabric and recovery potential. The Gambia's current economic situation is particularly precarious, with public debt surpassing 85% of GDP according to World Bank assessments. This concerning debt level continues to worsen under the current administration, which has shown limited effectiveness in addressing the underlying issues. The government's strategy of asset recycling, selling or leasing state assets for immediate capital, while providing short-term financial relief, creates a dangerous precedent that could severely undermine long-term economic stability. The practice of asset recycling, while appearing attractive for immediate fiscal relief, often initiates a problematic cycle of dependency. The temporary influx of funds masks the permanent loss of steady revenue streams, ultimately leading to increased financial instability and reduced public service capacity. This approach is particularly dangerous for a developing economy like the Gambia, where alternative revenue sources are limited. Critical assets in decline. The SeneGambia Bridge represents one of the most significant infrastructure assets in the country. Its recent lease to Africa 50 for $100 million over 25 years exemplifies the government's short-sighted approach to asset management. This transaction has raised multiple concerns among economic experts and citizens alike. Regulatory framework deficiency. The government lacks robust oversight mechanisms to ensure proper management and fair pricing. Public impact. The private operator's profit motivation could lead to increased toll charges, directly affecting citizens and commercial transportation costs. Fund allocation. There are serious concerns about the use of the lease proceeds, particularly regarding their investment in non-revenue-generating projects. Long-term implications. The 25-year lease period significantly restricts the government's ability to adapt to changing economic conditions or infrastructure needs. Financial imbalance. Analysis suggests that Africa 50 stands to earn substantially more than their $100 million investment over the lease period, representing a net loss for the Gambia's long-term financial interests. The deterioration of Banjul International Airport represents another critical threat to the Gambia's economic infrastructure. The facility's challenges have become increasingly apparent. Operational issues, recent infrastructure failures including major power outages, have forced flight diversions to Dakar. There's been a dramatic 20% decrease in passenger traffic since 2010. Reduced airline service and fewer direct international connections are also part of the problem. Financial structure. A controversial security levy arrangement where private companies secure port receives 50% or $10 of every $20 collected. Declining revenue streams due to reduced traffic and operational inefficiencies. Loss of market share to competing regional airports. Competitive disadvantages. Modern amenities and services lag behind regional competitors. Higher operational costs leading to increased ticket prices. Limited flight options and frequencies compared to neighboring airports. The impact of these issues is reflected in passenger behavior, with approximately 40% of Gambian travelers now choosing to depart from Senegal's airports. These travelers report saving up to 30% on international flights, while benefiting from better facilities and more frequent connections to major destinations. The Port of Banjul's situation perhaps best exemplifies the systematic decline of the Gambia's economic assets. The port faces multiple challenges that threaten its viability as a regional maritime hub. Financial losses include over $4 billion in lost revenue due to controversial duty waivers, higher operational costs compared to regional competitors, and declining cargo volumes despite its strategic geographic location. Operational constraints are also a significant issue, with limited capacity allowing only 2 large vessels simultaneously, outdated infrastructure leading to inefficient cargo handling, and extended processing times affecting shipping schedules. Additionally, the port's competitive position is weakening, as it is losing market share to Senegalese ports, becoming less attractive to international shippers, and struggling to accommodate growing regional trade volumes. The deterioration of these vital assets has far-reaching consequences for the Gambia's economy. The employment impact is severe, with direct job losses in affected sectors, reduced economic activity leading to indirect employment effects, and limited opportunities for skill development and career advancement. Government revenue is also affected, with decreased tax and fee collection, reduced capacity for public investment, and increased dependency on external funding. Economic development suffers as well, with a diminished ability to attract foreign investment, reduced regional competitiveness, and limited economic diversification opportunities. Private sector effects include increased operational costs for businesses, reduced market access and trade opportunities, and limited growth potential for local enterprises. To address these challenges, the Gambia needs to implement a comprehensive asset management strategy. Infrastructure investment should be prioritized, focusing on the modernization of existing facilities, effective maintenance programs, and long-term infrastructure development plans. Governance reforms are also essential, including strengthening regulatory frameworks, enhancing transparency and asset management, and implementing robust accountability measures. Financial management needs improvement through the development of sustainable revenue models, efficient cost management systems, and strategic investment plans for asset development. Operational improvements are crucial, with a focus on modernizing operational processes, investing in technology and automation, and enhancing service quality and efficiency. The Gambia's economic future largely depends on its ability to reverse the current trend of asset deterioration. The government must prioritize sustainable asset management by developing long-term strategies for maintaining and improving vital infrastructure. Economic diversification is essential to reduce dependency on single revenue streams and create multiple economic drivers. Enhancing regional competition through improved services and efficient operations is also critical. Public interest should be at the forefront, ensuring economic decisions prioritize long-term public benefit over short-term gains. The current trajectory of the Gambia's vital economic assets presents a significant threat to the nation's economic stability and growth potential. The government's approach to asset management, characterized by short-term solutions and insufficient oversight, risks creating long-lasting damage to the country's economic foundation. Without significant policy changes and strategic investments in these crucial assets, the Gambia faces the prospect of diminished economic opportunities and increased poverty levels. The situation demands immediate attention and comprehensive reform to ensure sustainable economic development for future generations.